Hi, I'm Brien Lundin, and I'm here at the Metals Investor Forum backstage interview with First Mining and its CEO, Dan Wilton. Dan, thanks for joining us today. Great company. We talked about it in our interviews, but to kind of set the stage, started off as kind of a resource bank, which is a great story. Readers of Gold Newsletter have made a lot of money over the years in similar stories, starting back with Silver Standard back in the 1990s.
Oh, right. Absolutely.
Yeah, it really worked well. That was like a 40 bagger, I think, for our readers. And you embarked at the bottom of the last bear market. First Mining started on a similar strategy and built up a lot of resources and made a bunch of news recently, literally as we're speaking today. So let me hand it over to you before I
Sure.
get too far into this and give us an update.
Yeah, no, absolutely. And as I said before, Brian, I really appreciate the support that you and your team and a bunch of your investors have given us over the years. I was not here for the accumulation of this portfolio. I only joined beginning in 2019. But Keith Newmeyer, who's well known to many of the people who will be watching, this really was kind of Keith's brainchild of the accumulation of the assets and the original formation of the mineral bank. But as I've said to a number of people, the challenge is they bought really good assets, right? Your best mineral banks are formed by buying things really cheap,
Yeah.
buying at $1 and trading at 10, right? And that's a great strategy, and it works very well when you get assets that are not expensive to hold. But we just discovered, even before I arrived, the company embarked on a strategy that was, particularly with Springpole, 5 million ounce gold deposit located 100 kilometers east of Red Lake, one of very few projects in the world that can produce 400,000 ounces a year. They just knew that it deserved to be developed. And so they did a couple of PEAs, 2017, 2019. And then with the team that we brought in over the course of the last year after I've arrived, with Ken Enquist, our COO, particularly, Ken's got a great track record of delivering value and scoping world-class projects and taking them through feasibility. We just knew that with Springpole, we needed to have it right at the time when the industry is going to need it the most. And I think that point is really coming into focus right now. No one's been talking about the production cliff in the gold sector, right?
Yeah.
But you tell me what is going to come on in production between 2025 and 2030 in the gold industry that's going to be a meaningful producer. It's a really slim list.
It really is. And it's a lot of factors coming into play. Number one, the gold price surging. So it increases the economics of a lot of projects, brings certain projects that may have been marginal or low margin, like some of the projects in your portfolio, and all of a sudden they're not only profitable, they're very profitable, and they're absolutely necessary because there's nothing in the pipeline, nothing in the development pipeline to supply the demand. So you have increasing demand for gold, and you have gold production actually declining because there's no projects in the pipeline. So where are they going to go? And they need size, they need scale, and here you are sitting with
exactly. And one of the great things about Springpole, listen, we put out the PEA at $1,300 gold. It had a 800 million capex and 840 million US NPV. I mean, the NPV of Springpole alone is multiples of our current market cap, but that's a $1,300 gold, and that looks like
right.
kind of the rearview mirror now, right? What are you going to scope a project at when we put out our PFS in December or January? 1,500 is kind of the long-term consensus, and the leverage that Springpole has to this increasing gold price. I'm reminded, we talked about this a little bit yesterday backstage, but this isn't 2011 that we're in right now, where you're trying to figure out, like, top tick the gold price for your studies. This is 2006.
Yeah, and there's so much more to the story, that this kind of a optionality resource bank, mineral bank play really kicks in when the prices go up. Yet we've seen the gold price and the silver price surge over the last couple of weeks. The miners haven't kept up because everybody's just standing back aghast at this and just saying, wow, look at this run. and they're not doing anything. They're sitting on their hands and not believing it to be real or sustainable. So they're not factoring it into the valuations of the mining companies, development companies. And that's just a process. It's just something they have to get used to it. They're going to start putting pen to paper, and they're going to see that your valuations, I touched on this a little bit yesterday. If you take your various asset groups, which are quite extensive, and just take 2 or 3 of them, you can divide it out however you like, your cash, your shareholding in treasury metals and gold Lund / Goliath, and or Springpole. Take any 2 of the above 4 or 3 of the above 4, and it roughly equals your current market cap. So everything else is for free.
Yeah, and on top of that, one of the things that some of your readers and the viewers from the forum may not appreciate is sort of our Pickle Crow project that we optioned out earlier this year. The company that optioned, they're earning into 80% of it. This is their only asset, really. Auteco's got a 300 million market cap. They've raised $37 million already this year to execute on our $10 million earn-in. And we're carried at 20% until a construction decision in that project. So that 20% is worth at least 20% pro forma of that. Pickle Crow, which people kind of accused us of doing a cheap deal on in January, is holding, all told, with our shares and the project interest, like about $100 million of value. So Pickle Crow and Gold Lund plus our cash, you're 80% of the way to our market cap. So you're still more or less getting Springpole, super critical strategic asset, for free. It's but it's nice that we kind of had this thesis at the beginning of the year, like we need to surface value from the portfolio. And that was something that I think we really kind of embraced and started with Pickle Crow, started slowly, small earn-in deal. We've done treasury now, and that's, I think people are really going to see the trajectory coming on that, because it's a district that no one's ever heard of. And, 3 million, I think, going to 5 million ounces with its federal EA approvals already. So
already permitted, and you're bringing your resources are really making the economics sing on that.
Absolutely.
Well, Dan, I think we're out of time now, but one thing I want to stress to people is this is just the point where your leverage begins to kick in. So people who think that maybe they missed this first early run in the metals, especially in the equities, they need to look at First Mining. You're extremely undervalued and in a position where I think you're going to absolutely command the market's respect fairly soon.
Well, I hope so, and we'll keep working hard to make sure that we can communicate that message to people and keep building on the fundamental value of the projects, which is the most important thing.